Today, Bitcoin and Ether prices soar, even after New York regulators shut down Signature Bank. Stablecoin USDC recovers its dollar peg after dropping to 87 cents on Saturday. And William Quigley, the co-founder of Tether and WAX Blockchain, explains what it all means for the crypto industry. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies surging higher this morning after a wild weekend for both crypto and U.S. banks. As of noon Eastern, Bitcoin rallied more than a whopping 13%, Ether jumped more than 8.5%, and Solana rose nearly 11%. Now, those price moves are night and day from the losses on Friday after SVB's collapse. So let's talk about all the news from over the weekend and what's ultimately driving prices higher. First and foremost, U.S. banking regulators are stepping up to stop widespread panic among the banks. In the wake of the Silicon Valley Bank shutdown on Friday, the Fed announced Sunday night that it was creating a new funding program to make all of the bank's customers whole beyond the FDIC's usual $250,000 protection per account. Now, this was seen as especially important at SVB, which catered mostly to startups and crypto-friendly VCs who held way more than $250,000 in their accounts. Now, importantly, this program isn't a bailout. The bank is still closing, and they said the program won't cost taxpayers anything. But as part of that new backstop announcement, regulators also announced the shutdown of Signature Bank, another crypto-friendly institution, to avert contagion to the broader banking system. According to a recent filing with the SEC, Signature had about $88 billion in deposits with about $110 billion in assets. Now, the Fed is guaranteeing all deposits, just like its Silicon Valley Bank. But it's a huge blow to the crypto banking ecosystem, which just lost Silvergate last week. The sweeping protections from the Fed also raised hopes for the USDC stablecoin, which lost its peg to the US dollar on Saturday after issuer Circle disclosed a $3.5 billion exposure to Silicon Valley Bank. Now, that represents around 8% of its $40 billion in reserve, and the stablecoin cratered to 87 cents on the news. USDC repegged to $1 moments after the Fed's backstop announcement Sunday night. That news is also raising hopes for crypto prices beyond the near term because the swift action by the Fed to provide liquidity is pretty much the opposite of the tighter monetary policy that they've been pushing for months now. Some investors are hoping they could slow the pace of interest rate hikes, which would be good news for the crypto market. All right, you're caught up on what happened over the weekend, but to talk more about what's next for crypto banking and stablecoins, I spoke with William Quigley, the co-founder of Tether and WAX Blockchain. So a lot of turmoil in the crypto markets this weekend, specifically within that stablecoin sector. We saw USDC lose its dollar peg. Other popular stablecoins followed suit, and it seemed like a lot of investor cash instead moved over to Tether. Now, everything is since repegged, but how concerned should we be about just how much volatility we saw in what is supposed to be the most stable corner of the crypto industry?
Well, I guess I would say, there's different types of stable coins. Actually 3 different types, but I think the safest because it's the easiest to understand is the type that Tether pioneered, which is for every Tether minted, there's a dollar behind it or a dollar equivalent of securities. And so the one issue you have with that, of course, is, and the reason USDC had its problem was because some of its money was held by Silicon Valley Bank. And going into the weekend, there was a question as to whether those deposits were safe. USDC, Circle, the parent of USDC, said it was about $3 billion at risk, which wasn't the end of the world because I think there was over 40 billion of total USDC outstanding, but it was worrisome. And most people understood the bank would eventually pay most of its deposits back, but I got to say, up until Sunday afternoon, before the Fed and the Treasury came out saying all depositors would be paid 100 cents in the dollar on Monday, we did think that there would be some loss. And so I'm glad that happened. And now you're seeing crypto really rallying. I mean, Bitcoin is up almost 20%. Ethereum is up over 10%. So I think crypto is in a little bit of a euphoria because things look better. But of course, longer term, there's some worrisome things about what happened last week for crypto.
Right. And that euphoria that we're seeing in the markets right now, I mean, is it misplaced? I feel like a lot of assumptions are being made about what this might mean in terms of the Fed slowing down its rate hikes or perhaps more money being pumped into the system. But I feel like those are very big assumptions to be making. So where is this enthusiasm
Oh yeah,
coming from?
there's been a lot of debate this weekend about that. I think I come out on rates being tempered or maybe even not increase this next cycle. It could be that they go up 25 basis points. And part of the reason I think for that is, this weekend, the Federal Reserve and the U.S. Treasury were sweating bullets. They were worried about a contagion from SVB going to all the other, at least the regional banks. They suddenly started looking at their Fed call reports and seeing that these banks were technically insolvent, meaning that they would not be able to pay back their depositors if all the money had to be paid back tomorrow. And I think it would take a certain type of mental gymnastics to be thinking about doing the very thing that impaired SFB, which was rising interest rates and the impact on their investment portfolio, while simultaneously holding an emergency meeting to figure out how to put together a bank rescue package because interest rates were rising. You could understand how they may want to think long and hard about what they want to do. Longer term, probably the interest rates do need to go up. We've had jobs reports that are pretty positive. There are a lot of the economy is still running pretty hot, but maybe not as aggressive. And I think so. You're getting both two things happening in the market today, which is why there's some enthusiasm, although not the case if you're in a regional bank. A lot of those are down more than 50%. But two things are happening. One, of course, we're not going to have a contagious banking collapse in the United States because the Fed intervened. And the other is, okay, if the rate outlook now is more modest, that has a huge effect on the overall stock market. So it may be a little premature, but I think people were so worried over the weekend that just getting back to where they were on Monday of last week seems like a breath of fresh air.
Yeah, I mean, yes, we've staved off the worst in terms of the government stepping in last night, but there is this question around liquidity concerns for the overall crypto market. Now that you've lost the
Yeah.
Silvergate Exchange Network, you've lost Signet with Signature. So, what does that look in the near term? Look like in the
Well,
near
in
term
the
for
near
crypto?
term, it looks like if your bank begins with an S, you should be worried. Just kidding. That's just a coincidence. But if you're in the chats and the Telegram chats, the WhatsApp chats that I'm in, a lot of people, CFOs, board members of companies that are in the blockchain space are asking which banks can we go to. Signature, Silvergate, and SVB, Silicon Valley Bank, were all crypto friendly. And one of the things I was worried about is that because of that fact, there would be a narrative that crypto brought these banks down, which is absolutely not the case. In the case of Silicon Valley Bank, of course, what brought them down was holding U.S. government issued or U.S. government guaranteed debt. That's literally what brought them down, in addition to a federal policy of raising interest rates. Now, you can blame management for not having adequate risk controls in place to reduce their exposure to those long-dated, low-interest rate bonds, but they were not in crypto. They were servicing technology clients, among whom were blockchain-based companies. But that really has nothing to do with the fact that they became insolvent and had to be seized this weekend.
So, what is the plan B for a lot of these, institutions that have been working in the crypto space? What are they going to turn to now?
So some banks are still around, regional banks, and it's been mostly, let's face it, regional banks that have been open to the idea of this just being Web3 being another type of technology. And these banks have traditionally, the regional banks have traditionally been more open to taking on younger startup-based clients, venture-backed clients. So there's a lot of regional banks out there. There are thousands of banks in the United States. So I think it's not like all banking access for crypto companies is over, but it's worrisome that, the trend isn't good, that in a matter of 2 weeks, the three top banks that blockchain-based companies used and that technology companies used are now gone. So I would like to see some other banks start to open up their operations for blockchain-based companies. There's also a question, Silicon Valley Bank and Signature Bank, the entities still exist and they will be auctioned off and acquired by other larger banks, presumably. Well, will those new owners be receptive to keeping or even onboarding more Web3 blockchain-based companies? That remains to be seen, but I hope so.
I think that Signature being a part of this announcement last night came as a surprise to many people.
Yep.
Had a pretty healthy balance sheet. What do you think is going on there?
Well, I haven't looked at Signature Bank's call report, and by the way, had people looked at Silicon Valley Bank's call report as far back as December, and this is a report bank management provides to the federal government listing all of their assets and income, and really gives you a picture of how at risk they are given their investment portfolio. And they were pretty close to insolvent, meaning the unrealized losses in December on their investment portfolio already looked like it was close to all of the shareholder equity the bank had. So I almost wonder why they didn't do something from an intervention standpoint before. But Signature, it did look on the surface to be pretty healthy. It had over $1 billion in income in 2022. Then again, so did Silicon Valley Bank. Silicon Valley Bank also, let's not forget, for people who think there's a moral hazard issue here with rescuing the depositors, Silicon Valley Bank got a clean audit opinion from one of the 4 largest public accounting firms in the world, KPMG, 3 weeks ago, February 24th. Their debt was rated by a federally licensed statistical rating agency, Moody's, as being AA. So there was a lot of federal eyes looking at this, and it came as a surprise because how much the interest rates had affected their portfolio. I don't know if that's the same with Signature, but I assume they were worried that too much money was going to come out on Monday of Signature Bank, and therefore they thought if they didn't do this, they would be rescuing it as well on Monday. They might as well just jump the gun. But we will see as we learn more about what they knew.
Any other takeaways from the last 5 days, last 48 hours, in terms of what ramifications for the crypto sector in particular?
Well, one thing I would say is it still is worrisome that stable coins, which one variety of them, the largest type of them, like Tether and USDC, have their cash in banks. And if something happens to those banks, then the underlying collateral supporting their price goes away. So, and it's hard for these stablecoin companies to get banking. It would be great if they could be in a systemically important bank, an SIB, that the Dodd-Frank legislation locked into this idea that there's banks that are too big to fail. It'd be great if they could put their money in those, but those banks haven't been receptive. So we need a better home for the cash of privately issued stablecoins. And I think we need more banks that are open to what's coming with Web3. So those are the things I'll be looking out for over the remaining part of this year.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.